What is going on, everybody? Happy Monday morning. Dillon and Ben here from PeakBot, the household name for automated trading. We're here with episode 187. Coming up on episode 200, we're going to say that we have an idea for it every show, and we'll see if we actually come through with anything.
If you guys have an idea of what we should do for the 200th episode, email us. Tell us.
I think we put it all in the hands of one gentleman. And it's this guy.
Yeah.
Doug.
Dougal.
Doug's going to tell us what we do for our 200th episode. Okay, Doug? That's a big responsibility, and I'm not sure. I'm actually scared because, Doug, I feel like we know you. But I'll be honest with you, Doug, I don't know you. You know what I mean? So don't be going in anything crazy, but come up with something fun for our 200th.
Here's the thing. Here's what I want to put out there, Dylan. Live, on camera, recorded. The next thing that Doug says we're going to have to do on episode 200, we've got to do it.
Okay, so no matter what he says, even if
it's
completely foul, Doug, don't do it to us. Don't make us, don't get us canceled. Okay.
We'll really see what kind of guy Doug is now.
Don't get us canceled now. All right, cool. Whatever he says we got to do. Ben and I, if we got to call in some recruits, we can get Thomas in here and we can abuse him a little bit on air. All in good fun and love and stocks. But anyway, busy show today. All right. We got a lot going on. As always, that seems like, a normal thing now, but we got stocks in real life. All right. So we're going to talk. Did you see it come through?
Yeah.
How do you feel about that?
Yeah, we can do that.
All right. I think we can do it.
We just can't play certain songs. Otherwise, the songs will get us taken down from YouTube.
Truthfully, you make a good point there, Ben. We are very limited on our soundtrack, aren't we?
We got this song that's going to start playing right now, and this is about as far as we can get.
Hey, you know what I mean, though? If there was ever one song to dance to, licensed music.
I hope episode 200 is on a Friday.
I hope so too.
I'd much rather have a dance party on a Friday than
I got news for you. Is Doug joining us on Fridays?
Yeah, sometimes.
Yeah. All right, Doug. Well, make sure you do. All right, that's fun. So I can get into this. Let's not spoil it because I was already bopping my head and stuff. Let's get into something else. Ben and I are both on the ones and twos right now. We're both trying to get the music and the volume going. Let's get into some stocks. Okay. Thank you, Ben. Stocks in real life. Alibaba, hit us.
Alibaba has been on the wheel and trend spread watch list forever. But before we get into the stock, let's talk about any personal experience we might have with Alibaba. Dylan, you ever buy anything from Alibaba?
No. I'm not sure I've ever visited the site.
Well, lucky for you, I've got the site pulled up.
Oh, let's see it.
So, for those that don't know, I would call it like an Amazon for businesses, for anybody looking to like resell products. Drop ship is a big term used, and Alibaba helps drop shippers. I've tried drop shipping before PeakBot. Yeah, before PeakBot, I tried it actually with my one friend Alan. Down in Palm Beach, Florida, when we were going to school there, we tried drop shipping wine refrigerators.
Whoa. And?
Yeah, we made one sale.
Did you make profit on the sale?
No. We spent way too many dollars to make that one sale. Alibaba AI services. All right.
Let's learn more.
Tell us more. So Alibaba, I've tried drop shipping a couple of things actually.
I remember that.
Which one did Mark buy? I forget he's talking about the wine refrigerator.
Yeah. It could have been your one sale.
I forget the brand, but it was like a $700 wine refrigerator. And
nice.
Yeah.
Your research told you that was the niche that needed carving out a little bit?
It was more so Alan he's French. He's from France. and he has an affection for one.
As they do.
Yeah.
And crepes, right?
Yeah. Yep.
Yeah. That's a whole that's a story for another live show. Maybe.
So I can't help but notice, and this guy looks like he could be related to Juan Soto.
Yeah, and he also looks like
brother.
He also looks like he could make a great French crepe.
Absolutely.
That collar makes him look a little European.
So
all right.
I want to know if we typed in like iPhone, what iPhone number are we on right now?
Oh boy. Are we on 17 or something? Yeah, is that the latest?
That can't be right. Is that right?
Yeah, man. I'm on like a 15 or something, and I feel like I'm outdated. I only got 2 cameras on my phone.
Yeah, so you can go to Alibaba. Look at this. You can get. This is the case that I have right now. Where's my phone? Check this
For
out.
$1?
I've got that case.
All right, I need a new phone.
I paid like $20 for this thing.
All right,
I could have came to Alibaba and got it for $1.28.
All right,
What's the minimum pieces here? Okay, so I would have had to buy 50 of them now.
Oh, that's the thing. Okay.
That's the catch here.
Got it.
Volume. That's what I'm saying. Like if you wanted to resell these on Amazon, oh wait, did that not? Oh, that didn't. That opened in a new tab. Yeah. Okay. So look, you have to buy 50 to 500 pieces is $1.28.
Hey, you want to get into the business again, man? Nah, too much hustle. But all right. So I truthfully I need a new phone case though. So I wish I needed 50 new phone cases, but okay. So no, that's my experience is very limited on Alibaba. That was it right there. So how about the stock? Let's take a look and see how the stock is performing. I was going to pull it up on TradingView here.
Go for it.
Give me 1 second. We will get BA. But you're right, Ben. This was traded. I should go back. My experience with Alibaba is trading it on trend spread. That's the only bot I traded it on. What do we got here from Doug? Baba is behind the
Quen AI free.
High quality and unlike the US version is free. Do you use it, Doug? Tell us. Should we? Is it available?
He does. He said he uses it.
Oh, okay. I'm sorry. That's the AI search now. Okay, I'm so sorry. Catching up now. All right, here we go. Let's look at the chart. So we're gonna go. Let's look all time. Ben, actually, before we even visualize this, do you have a guess on the IPO?
Oh, that was. I want to say somewhat recent. 2016.
Let's see here. Alibaba IPO was on 2014, September 19th, 2014. Not far off. Launched around $68 a share. Let's see what it's trading at today. All right, so turn this off, pull this up. All right, so here's Alibaba since launch, since their IPO in 2014. Okay, so you can see right around $80 a share. Quick spike up to 100. Came down, hit their what looks to be their all-time low in 2015, right around $54 a share. Had a nice run there up until COVID. And then I'm not sure that COVID was the reason for the decline specifically, but I'm sure it didn't help. Reached near their all-time low once again. And they've kind of been in recovery mode here ever since, I'd say, April of last year. They were trading around $70 a share. And today we're looking at monthly bars here. So if we were to look at dailies, we'll just go for the last year here. A bullish year, some great momentum at the beginning, some chop in the middle of the year, and then having a great last few months here. I guess we're finding some consolidation again. So we're trading right at 158 pre-market. We're down just a little bit here. Ben, we've had some chop here, finding maybe a zone, and I don't know if you want to maybe try to put a trade idea on this thing, but what are you thinking just by looking at this here?
I'm thinking we should try and trade out.
Okay.
And what I've got up on my screen is I've got Google Trends up.
Okay.
Let's get that going. I don't use Google Trends a lot, so I'm gonna we're winging it right now.
Okay.
I'm looking up the term drop shipping, assuming there's a correlation with the amount of people searching for drop shipping and the value of Alibaba.
Ooh. Okay.
And we can see there is a bit of a spike.
Zoom in. Sorry. There we go. That's so much better.
There's a bit of a spike in middle of summer, and then we kind of dip down, the small spike back up again a couple weeks ago. Now we're dipping back down. Can you pull up Alibaba's chart? Can we get a side by side? I don't think we could do that in StreamYard. But does Alibaba's chart look like this?
Yeah, here, hold
Did we
on.
bump up in the summer and then dip back down?
If you send me that link, I'll split screen us. If you can send me the URL.
I'm gonna try.
That's all I can ask. All right, so let's try this. Pulling it up here. And we're gonna go, how long is this going back to?
This
Last
is the
year?
It's just, yeah.
All right.
Most searched in Hawaii.
All right, so you know what's interesting? It's not, here I have it. We're gonna get this done. All right, so here we
Are
go.
you talking about Jack Ma? Jack Ma? I feel like he was making a run on Bezos, but then something happened where he went missing for a while, and now things haven't been the same since.
Just haven't been the same. All right, so then here we go. Ben, this, spike here, not necessarily. Now, they started to see a nice jump in September of 2024, which we're not tracking here. Okay.
Just click 1 year on Trading
I
Deal.
thought I did. All right, now we're here. All right. So immediate spike here in the beginning of 2025, not necessarily correlating. This big spike we had between end of June through end of July, that's right here, and it actually went down.
Oh,
so no,
and then look, we dipped down in October, November, and then price went up.
Yeah.
No, not quite. All right, so no correlation between the searching of the term drop shipping and Alibaba.
All right. Well, hey, this was a good attempt.
Hey, we tried.
I'll tell you this: when I look at this, if we're gonna go just full screen on this again, I hate to say it, but my brain always goes to the Condor. You know what I mean?
A lot of consolidation. It looks like.
Right. So let's just try something here. So let's just say these are strikes, and we can go pull up a Tradier account if we want to. Ben, you or me, you tell me, whatever.
I got it.
So this is in the past. Let's go to the last month here. All right. So now we're looking at 30-minute bars. I want to look at dailies. I want to zoom in. So let's say we were to even go wider, and we were to go through this whole setup here. Ben, tell me, and we'll figure out the dates based on the premium if you'd like. But I'm thinking, and it's a wide range, so there may not be anything available for this. But if we had like a 150 strike price, or maybe even the one below it, I don't know how if there's strikes at every dollar or not. But like 150, what's that?
Every $5.
All right, so then I'd say 150 or 145 on the sold put,
Mm-hmm.
and then we can I feel comfortable because I'm just looking at the consolidation here, like 185. Just tell me what it's at 185 for the sold put, and then you can share screen if you'd like. Here, let me get that up, and then we can look at dates to determine where the real premium is. Like that's not going to pay us anything for this week. You know what I mean?
I'm looking at January 2nd. So
okay.
The year 185 is kind of far out, but we could.
All right. What if we brought it down to 180?
We could try that. $5 spread, I'm assuming. Let's send that to the ticket. and then let's see what we can get. I mean, we're showing about $1 in credit, 20% return on risk. Not bad. Not bad.
And what this is again where we'd be trying to stay in between, essentially. Not bad.
I think I'd rather sell a call credit spread, I think.
Okay. We're bearish on it.
Yeah, I don't know why.
Well, here, so the last earnings didn't come in very well. Let's look at the technicals and then the analyst ratings, and then I say we either put a ticket in or we move on. So for the next month, technically we're seeing bullish. Seems to be the trend. Analyst ratings, strong buy, 40. That's a higher number than we normally see on these analyst ratings, I feel like. 40 say strong buy, 8 buy, only 1 strong sell, and 3 hold. And you can see the projections here. So
what was Alibaba's high in this chart here? Yeah, no.
It looks like their all-time high was right here.
What is that?
191.
Okay. Where's 170 on the chart?
170. Let's just fix the coordinates here. 170 is that top blue line.
Okay. Yeah, I think I would sell that call.
All right, sell a call. How wide do you want it to be? Let's see what the premium's like and how far out.
Well, I'm looking at the January 2nd expiration.
Okay.
$5 spread, but I'm only seeing about 87 cents in credit, which I don't love.
Yeah, because now we're talking, there's our finish line, the orange line here. Okay. Well, what do we want to do? I mean, look, we do this to take a look and see if there's anything we like. Sometimes the best trade is no trade. I do agree that, the bear setup doesn't suck here. I think that's a good amount of breathing room. It's trading, we got almost $12 there, $12 of breathing room on that.
You know what? I might say let's buy a put, see how it does over the next week.
Okay.
So what are we currently trading at pre-market?
Pre-market is down at 157.81.
157.81. Okay. So a 155 strike put is selling for about 425, call it 430 at the moment. That might not be a bad play because if we hold it for a week, we see how it does in a week. You're going to theta decay is definitely going to start to kick in.
Yep.
We're not going to lose too much value. So we're really saying over the next week, let's see how much we drop. If we get a big drop, we can make big money. But we're only risking, the risk is the same, right? Like if we were selling a call credit spread, collecting $1 premium, our risk is still $400. We're basically still risking $400 with this trade, but with bigger upside.
Yep.
All right.
So you want to throw a ticket in? I don't hate it.
Yeah, $4. Maybe throw in an order for $4. So look, we're just gonna go buy. Put a limit of $4 for the day. Preview. All looks good. All looks good. Submit. And then I'm only gonna hold this week. Right? Like whatever my loss is or my gain is at the end of the week is what I'm going to take. I guess we should define our exit. So go back to the chart.
Yeah.
All right. Zoom out a little bit. All right. That green candle, what does that wick down to most recently? That bottom green candle.
Oh, down here. The low on that was 148.64.
All right, so I think if we drop below 150, we sell. We sell that put.
I like that. That's fair.
So that's the play. That's the play.
See, okay, fantastic. See if it fills. Let us know. You can throw out a tweet or something. Maybe even. Not financial advice. And let us know how it goes. All right, excellent. That's stocks in real life and a trade idea there. Again, not financial advice. Ben, what else, man? Where are we headed now?
Doug brings up a good point. Says, "Is there a stop?" At the end of the week, I'm gonna just close the position. I'd say good risk management on a trade like this, because realistically, if we get down to 150, that 4 is going to turn into maybe a 6. So if we want a 1-for-1 risk reward ratio, if the price of that put creeps up to $6 or creeps down to $2, I'm thinking spreads here. Yeah, if we lose $2 on it, if we lose 50 cents, then let's go for a one-for-1 risk reward ratio, win 200 or lose 200.
I like it.
So we'll take this and we'll see how it does on Friday.
All right, fantastic. Well, best of luck to us all. All right, so Ben, where do we want to head into here? Do we want to review any of our bots, results, partners, or anything like that? We learning something?
We could head over to the bot shop if we want to go there.
Let's do that. Okay.
So we are covering King AI now. This is a multi-week series where we go through we're going to go through some of the data points that the ML model is getting trained on. We're going to do that this week and next week. This week we'll start off with some more basic concepts. Next week we'll get into some other concepts a little more complex, but all good there. We're going to talk about adjusting deltas, when not to trade, exiting a trade, and then continuous learning, because this bot is learning on every single trade. So this is the AI training part 1. I was also thinking too, if we have time, I don't know if we're going to have time, but we could pull up Option Omega. Option Omega is one of the back testers that we use for our testing, and then take a look at how this type of trade performs on the 10 delta versus 20 delta versus 30 delta, and then kind of show like it's pretty cool that AI is helping us select the deltas where we place our strike prices at. We'll see if we have time for that. But going into what this bot is trained on, of course, there are over 300 different data points that this bot is looking at the time of entry. We're not going to go over all of those. And a lot of, when we say data points, we're going to talk about delta, for example, today. There are probably 10 to 15 data points around delta that the bot's looking at. So it doesn't mean that there's 300 different indicators that the bot's looking at. But there's a lot of data around multiple indicators that the bot is looking at. So delta, what do we mean by delta, and how is delta thought of in regards to not just this bot, but any bot? So this is kind of just a recap of what delta is at a high level and how we like to think about delta over here at PeakBot. So lower delta, call it 10 to 15 delta. We like to think of that as a higher probability of profit when we're selling, right? When we're selling, smaller credits, flatter equity curve. So when the model decides, hey, we're going to trade at the 10 delta, the 15 delta, we're expecting less of a credit to come through. Higher delta regarding this trade, 25 to 30 delta. I don't think we've seen a 30 delta trade on King AI live.
Have we seen even a 25?
No, the highest we've gotten live, I think, is 20 delta. But lower probability of profit. The trade we have on right now, actually, is a 20 delta on the put side, 10 delta on the call side. And I did check futures. We're up just a bit in futures. So we are headed towards some blank space pre-market, which is nice to see.
Okay.
The delta choice shifts our break-even points, of course, because we're going to either collect more premium or less premium as a result of it. And the double win just means win in this scenario. We want to win on both the call side and the put side. That is a win on the iron condor. There's a bullish drift if risk pushes past the call spread, and a bearish drift if we push towards the put spread. Right now we are drifting to the bull side, which in this case is good because we have more room on the bull side. We sold a 10 delta on Friday on the call side, so we've got some more room to run upwards. If drift stalls near the shorts, it's really gamma and theta decay that are going to decide who's going to win at the close. We actually had a couple of trades recently that came down to the wire at the end of the day, where we saw a partial win and a partial loss all within a week span of each other, which is very rare to see that.
Yeah. Those are fun and scary.
I don't know if I would call it fun. They're fun when you win.
Yeah, well, yeah.
Fun when you win. I'll tell you what, that loss felt like a win.
Well, right. That's what I'm saying. Like, either way, win or loss, it's all about having fun,
Yeah.
I keep telling myself.
So having the same entry delta can produce very different results depending on the intraday path. And that's why this model is choosing strikes independently. So the call side and the put side may not have the same delta. An early move through a short strike creates adverse mark-to-market before end of day. Yes, it could, but this strategy is not going to get out. And the strategy is going to hold. And hey, if we take a max loss, we're going to take it on the chin. But we've seen price breach our strikes too many times and then revert back to the mean before the end of the day, where we said this bot's not going to have an exit. We're going to use AI to help us figure out if this is a good entry, and then we're going to let it ride. So that's delta. I think the biggest takeaway here is probability of profit. When we're selling, the lower the delta, the higher the probability of profit. The higher the delta, the lower the probability of profit. So let's get into implied volatility. That's IV. So IV, higher IV, wider markets, but bigger credit and wider break-even points. So when IV is high, we're going to expect to earn more credit. Typically, again, still dependent on the delta that we're selling. Higher IV means more expensive option pricing. And that is good when we're selling options. We don't want high IV environments when we're buying options, because you're going to overpay typically. And then you really need a strong move in your direction to profit there. Conversely, lower IV, tighter markets, so our condors aren't going to be as wide. I think a good example of this is a couple weeks ago, maybe it was last week, 2 weeks ago, I forget when, higher volatility, higher IV, I think it was last week. The condor width, the body width was like $120 on some days. And I like trading those environments. Now, recently, as IV's been decreasing, the body on the condor is like $70, $80. So not as wide. And we're still, again, collecting around the same premium, but that's based on where the deltas are that we're selling. But it's, high IV, we're going to get wider bodies on our condors. Low IV, we're going to get tighter bodies on our condors. We're looking for that IV crush, right? In high IV environments, after we sell our premium, we want IV to drop down, because a drop in IV is accompanied by a drop in value of those options contracts. And that's what we want as option sellers. So we're looking for we're looking to get in high IV environments and get out in low IV environments. Not to say you can't trade every type of environment, which this model is doing, but that's the ideal scenario. And I think the rest of the stuff on screen, I guess, high IV environments, higher credit, more risk, definitely more of a whipsaw risk, gap risk overnight. Riskier trade, but again, that's offset with wider bodies. You're gonna say something.
I was actually, which you weren't expecting. I know.
Go ahead.
But sorry, with the IV here, what we've learned, at least as the algo provider, is that you, the retail trader, at least a majority of you, want to play defense more so than offense. And you might not even know that or say that, but when it comes to like, hey, I'm paying for this bot to perform, we want to trade, specifically an iron condor strategy. We want to trade it in lower volatility. We want to sit out on these trades. And it's, again, we've learned that our King Condor bot, which does trade at a specific delta time in, time out, that does have a stop loss built in. And when we look at the results between the two over time, they're not so dissimilar from a back test, perspective and an ROI perspective over time. But there are larger drawdowns when you're trading in that higher volatility and at a higher delta. So I just want to put that in there.
Yep. Good insight, Dillon.
Well, thanks. I hope you mean it.
I do.
Okay.
So to, I guess, wrap up the IB discussion, Doug put it well. High IV pushes deltas out wider. Yes. Low IV will tighten them up. Typically in low IV environments, we can see with this last bullet over here, fewer trades are made in lower IV environments. Not necessarily true for this bot, but typically you'll see option sellers sell less in high IV environments. So the bot's looking at delta, the bot's looking at implied volatility, the bot's also looking at gamma. So the days till expiration concentrate that gamma risk. Now, near end of day, especially on the day of expiration, small price moves swing the P&L rapidly, and we can definitely see that as a risk as we are close to our strike price. Now, the beauty of just letting this trade play out and selling an iron condor is you got to define strike price that you need to either stay above or below, depending if it's the call or the put strike price. The bot, this trade in particular, is just going to let the day expire. So you as the trader don't need to make any end of day decisions. So like winners can snap back into a max profit by a penny, and losers can accelerate towards that max loss very quickly, especially towards the end of the day. You really don't know until the closing bell. And like we saw with those past two trades recently that did go to the bell, that was, you can see that risk exemplified. But again, with this strategy, we're not going to really do anything about it. So distance to short strikes, tighter high deltas, bigger gamma, larger swings. Further out of the money shorts means small gamma until touched. Yeah, so if we're further out of the money, which means typically higher IV, gamma is not going to really come into play until we get closer to that strike price. And the width doesn't change gamma at the short. It changes the max loss when it is breached. But again, we are defining our max loss with this strategy to $10 because it's a $10 wide spread. I think that basically covers gamma. I'm not going to get into too many more details. The bot's taking into consideration a few data points using gamma. But if we look back, we've got our delta, IV, gamma. Those are three, I think, well-known data points that we use in this particular strategy. Now, Dillon, you tell me, should we look at some back tests or should we get started to wrap up here?
Here's what I think. I think we show them the live results, and I have the data up here that I can share on screen because the back test data is fantastic. It's 10 years over 1,000% return, and that's based on the strategy that we did build. Okay, we back tested multiple strategies. The King AI today, and you can see it at the bottom of the screen here. You can go to peakbot.com/KingAI results and get the full spreadsheet. But why don't I just share the data? This is actually from a recent LinkedIn post of mine. I'll just put this up on the screen here. All right. Give me 1 second. Okay. So here it is. King AI since live. Okay. This is live trade results. The bot has taken 36 trades since September 17th. All right. Of that, it's won 32 of the 36. That's nearly a 90% win rate since live, which is fantastic. When we look at the ROI, this is per unit. So this is for trading 1 unit of the King AI bot, over $1,600 in return. And if we're looking at the cash on cash return, based on the $2,000 needed to trade this bot day in and day out, $2,000 because you can be in today's and tomorrow's trade at the same time, each requiring $1,000 in buying power. That's over an 80% return on cash in just 2.5 months. We're getting close to 3 months. But I mean, it's out of this world, but we're going to keep rocking with it, and make tweaks as necessary. We don't jump into those, but we just, we let our model that we've built here determine over 300 data points to come up with some confidence levels on these deltas and if the bot should be trading. And so far, so good. What we like about our bots is when they do what the backtest shows. And right now, King AI is doing it. So we're pumped. We're pumped.
We are indeed pumped.
King AI results available on our website, and you can get signed up, schedule time if you have questions. We're here to help you. Ben, let's give the people what economic events to look out for this week.
Awesome. So nothing much going on today. Now, today going into tomorrow, different story. We have some jobs data. We have a 10-year note auction. Tomorrow is also the first day of FOMC, so we typically like to be risk averse and not trade that day. So the 1 DTEs going into tomorrow will be off. The 0 DTEs tomorrow will be off. Then Tuesday into Wednesday. Wednesday, we've got employment data in the morning. Then we've got, of course, the Fed interest rate decision and the Fed press conference following that interest rate decision. So 1 DTEs going from Tuesday into Wednesday off, 0 DTEs on Wednesday off. And then going Wednesday into Thursday, we've got PPI on Thursday. We've got 30-year bond auction on Thursday. So again, the 1 DTEs going from Wednesday into Thursday off, 0 DTEs on Thursday off. And then things will resume back to normal Thursday going into Friday. Friday, not much on the agenda other than some Fed speeches and, of course, the oil rate counts on Friday. So it'll be a light bot week overall. There's a lot of potential turbulence that we want to avoid. So, like I said, bots will be off.
Excellent. All right, so little turbulence, maybe middle of the week here. Wishing for the best on our King AI position that is currently open, and fantastic. So I think that pretty much does it. We will be live again on Friday at noon Eastern time for the Automation Station, our other show here on the Tradier Hub, to dive a bit further into our results. We do Trader Trivia where we give away some free PeakBot subscriptions and much more. So thank you so much for tuning in. And as always, we'll see you at the peak. Take care. Bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.